You're looking at the euro dollar on the 5 range, and we have a head and shoulders that is now set up on this currency pair, and you can see this by the left shoulder, the head. We came up here, we put in a violation. So let me change that. So this is a violation. So what we did was this was higher than that, and then we've come back down here for the right shoulder, which just so happens to have come in to previous structure. We've now just had the higher high, higher close, and I'm looking at an AB equals CD pattern completing up here at 117.77, which just comes in below this structure level. And I'm looking for secondary targets up here at 117.96, a few pips underneath that even handled number. And the reason I'm looking for that is if we go to the 60-minute time frame, I'm just going to remove the VS1 levels, going to remove the orders. Let me get rid of this as well, we don't need those. Then what's happened here is that we have come up to this level here, and we have come into this level here, and so we've tested down here, we retraced and went higher, and we've put in a higher high, higher close on this big bullish 1 hourly candle, and it was a violation across here. And as you can see, this hourly candle was down here, and I entered when it was down here, and I'm looking at this candle being sucked back and going on to make new highs. And then if we look at it on the 5 range, you can see then why I have got involved here for the head and shoulders. So bring the orders back on. You can see this line was that higher structure level, the close of the candles. I'm just beneath that and that even handled number. And so it means that the risk on this trade is this much. Let's make that red. And the reward is this much. And if we do go on here and make a new structure high, which puts us in trend, I will then be able to reduce down the risk on this trade. We're going to want green for target 1s, and then target 2s are going to be higher up at that level there. Okay, so targets very much achievable here. Stop is in a very good position. We've had our entry signal. We know what we were looking for using the higher time frame, and so I'm just simply now I'll set an alarm in a moment actually, but okay. The risk on this trade is 16 pips. I've got my stop a little bit further back than is maybe required, but that's simply because I want to give this head and shoulders room for it to breathe. Again, we're not in trend yet, we've only had a violation. So as it stands, we've almost got a 2-to-1 risk to reward here. I'll set an alarm for there and come back and see whether or not this trade goes higher up. And we're back for an update on this head and shoulders pattern, currently 19 pips up now. And quite importantly, what we've just done is we have at this level now just put in a new structure high, putting us in a confirmed trend. So what I've just gone and done is I've reduced the amount of risk on this trade. I've got an ATR below the low plus 2 pips, and so it's reduced the risk from 16 to 14. Now we obviously haven't gone on to hit targets yet, but trading isn't just about having a strategy that's profitable, it's also about reducing down your losses. It's about reducing down your risk on those trades, and if you fully understand price action and can determine whether we are in a trend and if we're not, and you're able to look at the bigger picture, you can reduce the risk down on your trade so that if it suddenly stops and reverses and stops you out, you're taking less of a hit than you would normally. And it's absolutely crucial when it comes to trading because excuse me, I've only reduced the risk down here by 2 pips. It doesn't sound a lot, but that's actually just over 10% I've reduced the risk down by. Now if this was a bigger trade where we had 100 pips of risk and I'd reduced it to 90, well, all of a sudden you can start to see that over a long period of time you're going to start saving yourselves an awful lot of pips that you're just leaving on the table, because this might not go on to hit. It might stop just where this alert is here, instantly reverse and stop me out. We don't know. So we'll come back to this trade when we're a bit closer and hopefully see this thing hit targets. And we're back for an update on this trade, and unfortunately what I said came true. The market instantly turned and very quickly rallied down and hit my stop loss. And there's a couple of things I want to talk about here, because this isn't the end of the trade. Yes, my stop has been hit, and here on the 5 range we have now violated the outside return. There is one thing to bear in mind. I said to you at the beginning that I have my stop and ATR below and plus 2 pips, and the reason for that is, particularly on the 5 range, it isn't as accurate as your normal candlestick patterns, and this down here can be just a wick on the higher time frame, particularly if news has just come out and we've seen a big rally, and that is exactly what has just happened. So I've been stopped out of this trade for 14 pips, and I said to you at the beginning it's all about risk management now, and I implemented that, and obviously I've taken 14 pips of loss instead of 16. And you may be thinking, well, that's the end of the trade. Well, just before we decide that, let's just go and look at the 15-minute and just see what actually happened, because we know we didn't go and hit our projected targets. If I remove these VS1 levels and zoom in, I'm just going to remove these amounts here. Can you see what actually happened? We broke to the upside with this candle, we put in a rejection candle, and then boom, a very large lower low, lower close. However, this on the 5 is a structure level here, this big rejection candle, and look at what we did. We did not close below it. And then with this candle here, we rallied right down, we tested the bottom of this structure zone, and boom, sucked all the way back up, closed in the upper 50%. Big rejection candle after we've just got a big momentum candle. That says to me that news came out, we saw a big move to the downside, we tried to push lower, couldn't, we've held that level, and we could potentially now be going higher. So it doesn't happen very often that I get a second chance to enter in on the trade. But in this instance, since we didn't hit targets, since everything at the moment is indicating we can go higher, and I can look at that now and say, well, that is a wick on the 15-minute time frame, I can actually look at entering this trade and playing for the exact same targets that I were before. So if I bring on the orders, you can see that I've actually just got in this, I've not removed my stop. Here is my entry. Targets are back in the same position, and stop this time is a little bit lower. Now, of course, if I'm stopped out this time, there's not a great deal I can do about it, but the trade is still valid, even though here technically we're no longer in trend continuation on the 5 range. But again, the 5 range is a different look. And on the 15-minute, you can clearly see that's just a wick, and it's rejection after a momentum move lower, indicating a fake break. But we will wait and see if we can go ahead here and gain back the losses that we took earlier, and potentially maybe go into new equity highs with this trading opportunity. And we're back for an update on this trade, and as you can see, we have rallied into profit. We actually got up to around 17 pips in profit there. I will take you to the 15-minute candles in just a moment, but what I want to show you is this right now that's happening. So we've had quite a nice move higher and simply just consolidating sideways. This in itself is an indication that we're going to see a pop to the upside. And when I say it's an indication, I mean I know it stands a better than a 50% chance of doing that. Okay, and just being able to read the 5 range, to be able to read candlesticks and structure, gives me that extra belief and confidence based on experience, and just simply knowing how to read this. It keeps me calm during these instances, and it allows me to look objectively at the trade and see that yes, here on the 5 range my stop was hit, we'd broken trend. However, looking at the 15-minute time frame, we'd held the structure. This was a freak news event. We clearly had a big rejection after that massive momentum move lower. We failed to follow through with the momentum, and it's very rare that I get an opportunity to enter in again. I think this is the second time this month that this has happened, and typically it happens on the 5 range because again, the interpretation here of the candles is different to what you would see in the normal Chinese candlesticks. But let me take you to the 15-minute time frame to look at this, and we can see now the updated version of what's actually been happening with price action. So remove the VS1 levels and let's zoom in and just look at what has happened. We had that big rejection, and this was my entry. I waited until that candle closed, and when I entered I got slightly better price. As you see, it pulled back, and then that was followed by a higher high, higher close. This is followed by a higher high, higher close. We're seeing a little bit of stalling action here, but I'm anticipating that we are going to push higher and hit my potential targets. If we go to the 60-minute time frame, let's have a look at what the hourly shows. Look at that. Look at that. Now, if this is not a big old rejection wick, I don't know what is. Look, we're bullish, we're bullish, we're bullish, we're bullish. Freak news, boom, came all the way down, stopped me out and sucked all the way back up, okay? Clear rejection. We closed in the top, probably 20% there in the candle. And this is the power of being able to read price, of knowing the strategy that you're trading and what could happen. And for me on the 5 range, I knew I could be stopped out, and trend isn't as good as what it would be using the candlesticks. But here we are, we're pushing higher. We've just had the 15-minute candle close in the top of the wicks here. Could we push higher at this stage? Potentially. The fact is, I don't know overall what is going to happen with this trade, but I do know I have a 50% over a 50% chance of this trade going on to win, and I still have a good risk to reward. And so I'm going to want to take this trade again and again and again. Yes, it's a shame I got stopped out on first targets. If I'd had my stop all the way down here, would I have still been in the trade? Yes, but I used my standard back-tested stop, which is an ATR plus 2 pips when the risk is under 20 pips and I'm on the 5 range. So these are standard things that I use for consistency time and time and time again. And if I get stopped out, I wait to see what happens. Do we hold that level? And just again, look at this wick on the hourly. You cannot predict the unpredictable, okay? We cannot predict that the market was going to boom rally all the way down there, but based on what happened after it, I had a 50% chance. I knew that I had a better than a 50% chance that we were going to get sucked all the way back up, and that is exactly what had happened. So this is the situation. If we go up here and break out of this little consolidation pattern, which I'm assuming we're going to, I don't know, but I know we've got a 50% better than a 50% chance of doing that, and rally up here and hit my projected targets, well, that's going to bank me. Where's it gone? I think it's going to bank me. It might be a bit more now. It might be 30. 27. Okay. So half of that is roughly 14, and that's what I lost on the first trade. Okay. So if we hit first targets, that's pretty much going to get the losses back. However, what does it do if I hit my target here? It puts in a new high above this level, and it's likely going to put in a new high above this level as well. So do we still have a high probability of coming up to hit second targets afterwards? And the answer is yes, because if I didn't have that chance, I would be taking off my whole position here. But if we rally up here to hit these targets, and I think I just need to rework these out for secondary targets, then that's going to bank 47, of which I bank half, which is going to be 23. So after I've earned back my losses of 14 pips, and if we do hit second targets, this is going to be a winning trade in total for 23 pips, pure profit, when in actual fact it was a loss initially. And these types of scenarios are really going to make the difference between you being a good trader or a profitable trader to a very, very good and a very, very profitable trader. Now what we don't want to do is, obviously we don't want to enter in these trades and just try to revenge trade and try and earn back those lost pips. It is incredibly important that you understand price, and you know that very occasionally these situations will occur, and if the ball is in your court and everything's pointing in the direction of where you want to go, then go ahead, re-enter the trade and see if you can earn back those lost pips, if everything is telling you that that is what is going to happen. Of course, this could easily turn around and be stopped out, but everything is looking good to go and hit target. So I hope this rant hasn't been wasted. It would be lovely to go and see this hit first targets. I will then move to break even. It would be phenomenal to go and see secondary targets go and hit there, because that's really where the profit is for me now. And again, I'll look at reducing the risk down on this when we go and come close to those first targets. And we're back for an update on this trade, and as can be seen now, we've gone and hit targets. Hooray! Very, very happy. Happy because it was a losing trade. I turned it into a, well, technically it's actually now a break-even trade, because I've just earned my pips back. But quite importantly, look at what we've done. We have now made a new high above here and above here as well. Again, this is the 5 range, so it's probably just a wick. And we have just gone overbought as well, but nevertheless, here we are. We're holding for second targets. This is where the money is for me now. We have now, thank you to that sideways consolidation, we have a nice place, if the market comes back down, to have to fight through first of all, and it's very likely going to go on up and hit targets. So while the consolidation at the time was, oh, would it just hurry up and hit targets? Look what's happened now. It's provided us a structure level. So let's see if we can get up here and get this second target and actually earn some money on this currency pair. A little update on the trade. Time is 9 o'clock in the morning, 26th of September, and we have been struggling to get my second targets, which is what I really, really want to see here. So we came down into the structure level as predicted, and what I am noticing is that we actually made a break below, close below, indicating that that structure level didn't hold. However, the following candle, we sucked pretty much all of that right back up, and I can look at this as a fake break. Maybe wrong, but you look at a candle that closes right down at the bottom here showing real strength. It made a break below, close below. The following candle just, it actually opened up higher up first of all, and then it closed back up at the top. And what we've done now is we've come down. We've seen an indecision candle, although we have closed in the lower 50%, and we've seen a push up and a rejection. So we've got a couple of minutes to go until this candle closes. I really have no idea what happens here. This is just a trade. You just got to leave now and just wait and see if we get second targets. And that's it. We'll come back and hopefully have an update later on today. And this is the final video for the euro dollar, and what a damn shame. We never got those second targets. We came close, but no cigar. I think that's the the phrase. We didn't come to that 1800 flat. What can I take away from this? I take away that it's damn hard luck. I think that's what I can take away. So there we go. Overall, ended up being a break-even trade.